Sanbonani Dumelang, good evening and welcome to episode 262 of the Private Property Podcast. I'm your host, Uzamandungwa Kumalo. It's the Wednesday edition of the Private Property Podcast, and as we do on most Wednesdays, we've got somebody from the Absa Home Loans team. Now, if you are new to our podcast, you've certainly been missing out on a number of great episodes. So do make sure that you go to our Facebook or our YouTube pages to catch up on all the great content that you have missed out on. To all our regular viewers, top fan gang members on Facebook as well as on Instagram, welcome to the show. You know how we do it. Every single weekday at 7 p.m., I'm always in conversation with an expert who helps us navigate our property journey. Doesn't matter whether you're looking to buy, to sell, to rent, whether you're a tenant or a landlord, this is the property podcast that you want to make sure you're always plugged into. It's the only daily property talk show in the country where we make sure that we bring you the right experts to help us along on our journey. Now, of course, one of the other great things that we do right here on Private Property is to give you great content across our social media platforms and on our website. So do make sure that you visit www.privateproperty.co.za, as well as our social media platforms from Twitter, Facebook, Instagram, as well, of course, as we're now on TikTok, so you can catch some great videos that Essie Clarkson and Chad do bring to your screens. You can follow myself at Zamantungwa_K on Twitter as well as on Instagram. Now, speaking of the other presenters that you can catch on TikTok, of course, you can also catch them right here across our social media platforms where they bring you great shows at 8 p.m. As it is a Wednesday this evening, you can catch Essie Clarkson, who'll be bringing you the First Time Home Buyers Show, where she's always in conversation with people who have gone to grow their property portfolio from strength to strength. So if you want to get a few lessons from those who have walked that path and have gone on to grow their portfolio, then that is a show that you want to make sure you are tuned into. And we also bring you award-winning farmer Mbali Nogo. I saw on her social media pages this afternoon, she was playing with some gadgets. I think she had a drone in one of her farms, or in her farm rather. So if you can also, of course, follow her on social media, but catch the farming podcast every Tuesdays and Thursdays, where she tackles all matters relating to agriculture. So if you've got green fingers just like Umbali, then that is a show that you want to make sure you're always plugged into. And for those of us who like daydreaming about exquisite properties, or perhaps even on the market for such a property, then do make sure you catch Chad on the Home Shoppers Show every Monday and Friday, where he takes you through some of the great properties that you can find on our website. Those are some of the great programs that you can catch here on Private Property across the week. So every weekday at 7 p.m., you have an appointment with myself. And at 8 p.m., we've got a whole host of great shows that you can plug into. Now, this evening we're talking about something that I'm very passionate about. We've touched on this topic before. We've even had this conversation with somebody from Uber Home Loans, because we're looking at it from a bond originator's perspective and them helping us on this as much as possible. This evening we've got the financier themselves, so we've got a bank that's going to be able to tackle this topic with us and really hold our hands in better understanding what we can do if we are self-employed. So for all the entrepreneurs out there, you're self-employed, you're a sole proprietor, we want to get a sense, how you can go about getting your home loan. So this evening, we're looking at Absa insights on applying for a home loan when you are self-employed. So if you've ever wanted to do it, certainly as an entrepreneur, or you're self-employed, or you're sole proprietor, and you still had questions around whether or not you'd even be able to get a home loan, whether, the bank is not going to look favorably towards your application because you are not employed full-time, perhaps even you wanted to find out how your rates would fare when you apply to a financial institution, then this is the podcast you want to make sure you do not miss out on. I've got this evening Julian, who's a National Manager of Retail Credit Solutioning and Pricing at Absa Home Loans. Julian, good evening. Thank you so much for joining us again on the show.
Zama, thank you so much for having me. It's always a pleasure to share some of our insights with the audience. So thank you very much, Zama, for having Absa and having me on your show again.
And it's always so great to be able to, have a financial institution come to the show, because I always say to people, it's one thing to get an answer from somebody who knows what the answer might be, because perhaps they've interacted with a financial institution, but it's something completely different when we then ask the financial institution. Because I think one of the things that I found, Julian, and I'll ask you this later on in the show, I was even asking you off air, is that as we're in the middle of this global pandemic, and of course there are many moving parts, many shifting goalposts, financial institutions are also finding that they are, changing and constantly reviewing their offering and how they're doing business, how they are profiling various applicants. And so it's always great to get a very recent update on how financial institutions are looking at applicants, whether they're self-employed or full-time employed, their appetite for taking on more credit, and of course extending this particular facility to different applicants. And this is one of those things that, of course, we're going to look at later on. But a really good starting point, Julian, that I want us to look at is when we look at entrepreneurs, sole proprietors, people who are self-employed, how does the way that they are employed essentially affect the assessment on their home loan?
Zama, and thank you very much. I think a very good introduction and a very good question, Zama. I think just by the very nature of being an entrepreneur or being self-employed, we know or expect that the flow of income is not going to be as regular as if you're full-time employed, when you have a job and have a monthly salary coming through. Though I must also say that we do find that with some self-employed, they're able to pay themselves a salary on a monthly basis. And obviously you can see the flow of that income going through their bank account. So that makes it a bit easier. So for self-employed, so very much, I think we have a responsibility as a financial institution to make sure that we first of all protect the client, and then secondly also protect the bank as well. So we're entering into a long-term relationship with any client for that matter, and we're talking about 20 plus years that we're going to enter into a relationship. So we want to make sure that when we assess any customer, whether they're self-employed or full-time employed, that we assure ourselves of the ability of the individual or the business to repay the debts, either to pay the debts to the bank, and make sure that we don't have to go, a year or two from now to repossess the property. So that's obviously not the game that we as Absa are in. So it's very much a matter of making sure upfront that we can actually prove the affordability of the self-employed individual.
And, Julian, I always emphasize to viewers at home, and I know that many people who work for financial institutions, particularly in the home loan division, always say that the bank is not in the business of repossessing your property. They actually want you to be able to, continue paying, because it also costs them to, make sure that they repossess that particular asset. So if anything, the bank does not want to repossess your property. That is not what they're in the business of. It's actually in their bottom line's best interest for you to continue paying on time, every single month. So then, Julian, I'm sure a lot of viewers who are self-employed or might even know people who are self-employed and want to access a home loan, one of the things that they want to then find out is how do they go about proving their ability to repay the home loan? Because oftentimes, of course, with somebody who's employed full-time, you would submit your payslip, and they would obviously also say that they're employed full-time. One of the checks that the bank does is, in fact, call the employer to find out, is this person employed here? So that's a relatively easy one, because you take a view on that person, they're employed, it's full-time employment. And so that they've got a stable job and the stable income that their payslip would essentially prove. But of course, with somebody who's an entrepreneur or sole proprietors, they don't necessarily have that benefit. So how can they go about proving the ability to pay that home loan?
So first of all, and I alluded to it earlier on, Zama. So for us, it's because we understand that the flow of income is not as consistent as someone that is full-time employed. So what we do call for is financial statements, and that kind of give us a view of past performance of the business. And we often base our projections going forward on how well the self-employed sole prop has been conducting their financial affairs in the past. So that's a second check that we do. So firstly, we obviously check financials. As I said, because of the flow of income is not as consistent. So we kind of take a view of, or do we see income, do we see profits in the business coming through? And we want to see 2 years financials, because it's very difficult to make an assessment on the sustainability of a business just to focus on 1 year. So that's why we want to, when we do it, obviously to compare year one versus year two. And we do understand that obviously during COVID and so on, a lot of small businesses were severely impacted, and obviously the flow of income might not have been there. So in those situations, we will then also ask the client then obviously to provide us with contracts, proof of contracts that they might have. We would also ask them for a cash flow projection to kind of give us a view of what they expect the flow of monies to be in the near future. So based on that, we then do an assessment on whether this particular individual sole prop or business will be able to repay us as a bank. And again, like I said earlier on, so we also have a responsibility to our customer, not to make sure to ensure that the customer don't over indebt themselves, and also to the bank and our shareholders to make sure that, to your earlier point, that we don't go and repossess a property six months from now, because that definitely is not our objective. That's not our strategy. Our strategy rather is to try and host the nation, make sure that they're in properties, Zama. So that really is maybe the beginning of how we assess the self-employed.
We are taking your questions and comments this evening as we look at your insights from Absa when it comes to applying for a home loan when you are self-employed. I certainly want to, I'm looking forward to some of the questions. The team has already sent me some of the questions that you have brought through. If you are self-employed or an entrepreneur, please share with us the process that you went through when you were applying. I want to find out how difficult or easy was it for you to get a home loan as somebody who is self-employed, because I've certainly heard a number of self-employed people saying that it's been quite a struggle with banks sometimes wanting a higher deposit. Of course, it is more admin, and I think across the board you're going to get a sense that it is slightly more admin with regards to the paperwork that you'd have to submit. So do share with us how that process was. Did you find it smooth? I think, and a great jackpot if you've ever applied for a home loan, first when you were employed full time, then another time when you were self-employed. What was just compare and contrast that experience for us. I'd like to get a sense from you at home. We've got a question coming through here from Utural Jafta on Facebook saying, we have a home loan with Absa Bank. My husband is self-employed and we want to finance a second property. How would we be assessed now? I am still full-time employed. He was full-time employed a month ago and decided to concentrate 100% on the business.
Zama, and again, thank you to your viewer as well for the question. I think a very, very good question. So based on the history, so depending on the full-time, let's talk about the husband, particularly because the husband, I believe, has now joined and he went to start or continue his business. So what we look for is to make sure that the business that the full-time employee is now going into is related. I mean, we don't want a medical doctor now to go and start developments unless he's had previous experience of property development, because it's a totally new field. You might not have any experience in that particular field. To the question raised by your viewer, so if the husband is going to continue a business and there's a track record, that will definitely will stand them in good stead of securing a loan, because we can then base our decision on, obviously, I would imagine that they would have financial statements for the business that the husband was running previously. And as I said, we will also look at to see is it related to what he was doing previously, because we don't want someone to start a technical type of business where they had no experience in previously, and that will be very difficult for us to assess whether that business and the income from that business is going to be sustainable.
More of your questions and comments here. We've got a question coming through from Facebook. Utsepo Mkhubudi asking, he's got two questions. The first is, let's say A decides to apply for a home loan with B. And let's see, sorry, I'm just reading this from my screen. With B, and A's credit score is very good, while B has a poor credit score. What is the probability of the bank approving them for the home loan, considering the different credit scores?
So we will get a combined credit score for the two, Zama. So where the one is good and the other one is bad, we look at the combined credit score. In that instance, they might not be able to get a high LTV loan, but we definitely will not show them a way, Zama. So there's definitely an opportunity for us to assess the application, and there might also be reasons for why the second applicant has a poor credit score. I mean, life happens. We know what happened with COVID last year. So we know that people's income and or their ability to earn an income has been impacted. So we obviously look at the circumstances around the second applicant, having a poor credit score. If it is because of just a reluctance to repay debt, that obviously is not going to stand them in good stead, because obviously if there's a history of poor debt repayment, then obviously we as a bank will also be reluctant to enter into a relationship with them going forward. And again, as I said, we might do it, but not at a high LTV. We might come in at a very low LTV, loan to value.
And a second question from Tepo is, how does the bank determine how much to debit from each individual? So this is the person A, person B. I know the answer to this one, Julian. Please do share. How would the bank determine that?
So obviously we would ask for a debit order to come from one particular party. How the A and B decides how they're going to split the repayment, that's up to us. We will only ask for a debit order to come from one. And again, so they need to understand, though, although we might only ask for the debit order from one account, they should understand that they are jointly and severally liable for the debt. So in case of default, the bank can come to either party for the repayment of the loan, of the debt.
Now, Julian, I think one of the things that I know some entrepreneurs or sole proprietors aim to do, especially when I almost want to say when their admin game is better than others, is try to differentiate between their personal, personal income and, of course, the business income. So how does the separation of the personal versus the business income change the application of a sole proprietor, if at all?
Yeah. So unfortunately, for a sole proprietor, it's very difficult to separate a business from personal. You are your business, and your business is you. So it's very difficult to differentiate between your business and your personal affairs when it comes to a sole proprietor. And so in those instances, we take a view of looking at you holistically. So we will look at both the expenses. Obviously, the income will be one source of income, but for the expenses, we will look at both the business expenses as well as the personal expenses, and obviously combine that to get a view of whether there is in fact a surplus for us to consider the loan going forward.
And, Julian, on that matter, because when I asked this question, I pointed out how some entrepreneurs or some sole proprietors are better at their admin than others, in as far as even, keeping account of income versus the expenses and keeping all their paperwork ready. I mean, we're going to be getting to the matter of the kind of paperwork that they need to be able to submit. I'm interested to find out if, certainly as Absa as an institution, because you've just mentioned how you take a very holistic view of the person and not just the business entity. In the event where somebody's, let's say paperwork is not necessarily the best, and this is as far as their admin and keeping track of everything, perhaps that's not that great. But when you do go through, the financial statements, you're actually able to see that this person, in as far as affordability and being able to repay that particular loan, they'd effectively be able to do it. It's just that they haven't been particularly great at doing all the accounting practices and whatnot. How does a financial institution view people like that? Because the reality is a lot of sole proprietors, and even entrepreneurs who are running relatively small business, that's the nature of how they are working. As much as we keep telling people, be on top of your admin, be on top of your admin, unfortunately, yes, it's a need to have, but in as far as their priorities and staying on top of it, unfortunately, it's not one of those things that always gets ticked off. So how do you then, as a financial institution, work with somebody like that? Because you look at the monies in and out, and I know you often make them do a balance sheet, and the balance sheet looks good. It's just that everything is slightly haphazard, even the income expenses, when it comes to the business and themselves, it's just a bit everywhere. How does a financial institution look at individuals like that?
So please allow me just to maybe share this. I think there's an Afrikaans saying that says, ver van jou goed, naby jou skade, and I'll translate. I think the English version goes something like that. What you can't control, you can't manage. So if you can't control your finances and so maybe a lesson to entrepreneurs and sole proprietors, if you can't control your expenses, you don't know what's happening, how are you going to be able to manage your business? So I think it becomes very difficult for us as financial institutions. Like you correctly said, we obviously will be able to obviously piece together all the paperwork and obviously see that there is affordability. I think some of the tips and I hope that we will get them is around making sure that you have good financial processes and so on. And it's really about managing for you as an entrepreneur. You want to go to bed with a peace of mind, that knowing that my finances is in order. I don't have to worry about that. I might miss paying a creditor. So I think maybe that is a starting point for this discussion, Zama, is to make sure that kind of you have that processes in place. Because if you start failing to pay your creditors because of your lack of just proper controls, that's going to affect negatively on your ability to get finance with a bank, because obviously, you might end up with legal processes against you for not paying your debt. So maybe the first point I want to make is to make sure that you keep proper records. Make sure that your books and your what's name are in order, because we are going to we as a bank, we're definitely going to ask for it. Often customers come to us and they have not submitted financials or their income, or declared their income to SARS, and that makes it difficult for us, because how do you make sure that the financial affairs or with SARS are in order, and as the sole proprietors might know, SARS will come after them if their financials is not in order. So as a bank, it becomes a very difficult and tedious process, kind of to piece together all these paperwork and so on. So the advice to sole props, entrepreneurs, self-employed, is to make sure that they have proper financial systems in place. So when asked for it, they can provide the information to a bank. And again, it will just make the process and the ability of getting finance so much easier.
Gina, I wanted to change gears, slightly with this conversation, because one of the things that we've certainly spoken about on the show is around the FLISP, the subsidy that, for example, first-time home buyers can access, that earn between 3,501 and 22,000, and it's available, of course. And I know that even if they were to be applying via Absa, they'd be able to get that particular subsidy. It's provided by the Department of Human Settlement, and Absa is always able to facilitate that or FLISP applicant. So I'm interested, Julian, to find out then if there are any subsidies or incentives that are provided for self-employed home loan applicants.
So unfortunately, at this moment, we don't have any such products available for self-employed. However, what we do have is we have a young professional a proposition where we do look at, so let's say you a medical doctor, and you now decided to start a sole proprietor. In those instances, we can then look at how do we accommodate and how can we offer a loan amounts up to 100%. And then we're also talking about getting discounts with attorneys and so on. So we do have the young professional offering that we have, but unfortunately, there are no current incentives for self-employed individuals that we as a bank have, as opposed to the FLIS, which is there for first-time buyers, full-time employed individuals, South Africans.
So, Julian, earlier on, we were talking about the paperwork and how people who are full-time employed are able, for example, to provide their payslip as a form of one of the documents that the bank would require. Perhaps take us through what kind of paperwork would be required then for people who are, of course, entrepreneurs or sole proprietors, and how it's different, of course, from applicants who are full-time employed. So would they need to provide things like your financial statements or affidavits? What kind of paperwork are we looking at? Because I know that is one of the administrative pressure points slightly, especially for those, as we've mentioned, who may not necessarily be on top of this.
So I want to say unfortunately, but because of the nature of the flow of income, I appreciate and I hope that your viewers will appreciate that we unfortunately can't look at a self-employed sole proprietor the same way we look at a full-time employed. Full-time employed will have a payslip, they will have bank statements. So for the self-employed or sole propriety, unfortunately the list is slightly longer. So we will call for financials, and I explained previously around financials, and depending what time of the year you're applying for the loan. So if you come in, let's say July for the loan, then obviously your financials, if your financial year end is the end of February, would be more than 6 months old, and then we would call for management accounts as well. In addition to that, we will also ask for contracts. That you might be able to have negotiated. We might ask, and again, these are, and depending on the circumstances that we're dealing with, and so we really work on a case-by-case basis. So there are I want to say a compulsory list of documentation, and then again, depending on the individual client, we might ask for additional information. So we might ask for an IT-34, a letter from your bookkeeper or your accountant or your auditor, if you are a sole prop, to confirm your income. And as I said, I mentioned the IT-34, which you get from SARS as a confirmation of the tax declared and whatever tax is due by you. So that is some of the documentation. In addition to that, we obviously will also call for bank statements to see does what we see in the financials, does it correspond with what we see flowing through the bank account in either the business account or the sole props account. So yeah, unfortunately, the process or the requirements is a bit more, but we obviously try as far as possible to streamline the process and to make sure that the experience of the customer, whether he's full-time employed, self-employed, is a seamless experience with the bank.
Julian, I know we're slowly running out of time, but I cannot let you go before asking this. I think one of the things that we've realized during COVID is that a lot of self-employed individuals, people who are running their small businesses, struggled quite a lot during lockdown and continue to in some respects. How did this affect or have an impact on the ability to sustain credible income record? Because this is, of course, one of the things that you would look at. So what kind of view then is the bank looking at in the event where perhaps you were negatively affected by, obviously, the pandemic and your income took a knock, perhaps for 2, 3, or 4 months, but you're still interested in applying for a home loan?
So, as I said earlier on, life happens, and unfortunately, COVID happens, and it's not because of anything that the business owner or the sole prop has done. It's just because of what has happened, and we are, as a bank, are very much aware of that. You would recall, or your viewers might recall, Absa's stance at the beginning or towards the middle of the pandemic, where we offered relief to our customers, and in some cases, to 6 months relief was offered to both, the self-employed and to our full-time employed customers. So Absa, we are very sympathetic to customer situation. And having said that, I think that the first and important thing is for the business owner to make sure that they engage the bank. We sitting inside the office, or we're sitting, don't know what's happening in your business. You know what's happening in your business. So I would really recommend in those circumstances for the business owner then to go to the bank and explain the situation and see, obviously explore, what options there is available, what arrangements can be made in terms of the repayment ability. And as a bank, and as I said earlier on, we are very sympathetic towards our customers, and we will, as far as possible, we will see how we can assist our customers in kind of coming to some sort of arrangement, and then maybe follow on to that. So when an arrangement is made with a customer, I think importantly for the customer to stick to that arrangement. Make sure that if you're committed to paying 5,000 Rand a month, make sure you pay the 5,000 Rand back religiously. And I think as a last resort, if we can't then come to any sort of arrangement, and again depending on how long the process or the impact of COVID has been on the small business, we also offer a service in terms of helping the customer to sell their property via our Help Yourself product offering. And there we do it via an approved panel of estate agents, and there are other benefits. There are additional benefits to the customer. We give a reduction in the amount outstanding. We also assist in terms of outstanding rates and taxes as well, which is just some of the benefits that we offer to our self-employed individual and to our clients at large, Zama.
We've got a great question here coming through on Facebook from Unelson Mukwala, who asks, what steps are required when one signed surety and the debt is being registered on their personal account and you now want to move the debt to a business account?
Okay, so that will obviously be a new application, a brand new application, and then to follow the application process. So I would advise the person either to contact the nearest branch, and then to go through the process of then having the documents available, the company docs available, depending on what company we're talking about. If it's a P2R Limited, making sure you have all your SIPRO documents, and then obviously, and again depending on whether the flow of income is coming from. Who's going to pay the debt? Is it going to be the business? Is it the trading entity? Are they simply just using a legal entity as a special purpose vehicle to house the property but they will still be reliant on the full-time employed individual. So that obviously we need to clarify, and that we can do at the time of the application. But definitely it will be a new application that we will have to do to switch from the personal to the business.
And Julian, on this, in the event where they're looking to use that business vehicle as an SPV, how would the application still be viewed at? So would the affordability, we'll say, of the individual still be affected? So suppose the property is with a mill and you're able to move the ownership to the business, and obviously this is now the bond, move the bond over. So would they still be exposed for that R1 million in their individual capacity? Because I think that's the crux of what Nelson is ultimately asking. So
they will still be liable, because obviously if the income to repay the debt is coming from them as an individual, we are going to tie the individual with a surety to that debt, because we are placing reliance for the payment of the debt on the individual. So we use a special purpose vehicle. I think just also be careful if it's a trust with only two trustees, and I'm not sure of the time you have, but
do break this one down, because I know how important this particular point is.
So if it's a trust with two individuals, then we are required that application or that trust then falls within the ambit of the National Credit Act, and affordability must then be proven in the name of the trust. However, where one of the two trustees is a juristic person, then we can look at the income of a third party, of one of the trustees. But I just want to make clear that, and I want the audience to hear, when you come to Absa with a trust as an applicant, and there's only 2 trustees, and both of them are natural persons, you're going to have to prove affordability in the trust. You will not be able to rely on the income of the trustee for affordability. However, where there's 3 or more trustees, then that obviously falls outside of the ambit of the National Credit Act, and then in that instance we can then look at the income of the trust or trustees, for affordability. And thank you very much. But I think that's a very important point, Zama, that your viewers need to understand around when they use a trust as a special purpose vehicle.
And I think, and I'm glad that you've brought that up, Julian, because I'm going to make a promise to viewers that we'll actually look at using, the different ways you can use different entities as SPVs and what goes into them, because I think we still don't have the greatest understanding in how one goes about using an SPV and even the individual exposure. Because I think one of the big things, Julian, right now, especially with a lot of people getting interested in venturing into property, is that there's this perception that you can just go register a business right now and want to take a home loan and not need to prove affordability, certainly as a director of that particular business, and somehow a home loan would be granted on behalf of that particular entity, and you won't get exposed at all. I think there's that growing sentiment, and unfortunately not a lot of people have a good understanding of how to navigate using a particular or a separate legal entity in making sure that they grow their property portfolio. Before I let you go, one very last final question before I ask you for tips, and this is a very easy one coming from Letitia Portier asking, is there an age limit for doing an application for a home loan?
So obviously we can't look at home loans for minors. Unless they've been emancipated by court. So court has said no, that they can obviously enter, but obviously 18 is minimum age, and then also so maximum age so the final payment should not be made at age greater than age 75. So between 70 and 75 is maximum age. So your last payment we won't allow to go above age 75. So if you 65 years old, so the maximum term that we will look at for a loan will be between age 70, so between 5 years and 10 years. And again, it will depend on the customer profile. And in that instance also, then obviously we want to make sure around post-retirement income. Do you have sufficient income to obviously repay the loan, for the duration of the 5 or 10 years, whichever period we agreed to.
Julian, I know I asked you this off air. I am going to ask it for the benefit of our viewers at home, especially because we're looking at self-employed applicants. I'm certainly interested to find out from you the appetite that the bank generally has for self-employed applicants and how they would typically fare when it comes to the interest rate that they get charged. Because I think there's also perhaps a misconception that by virtue of being a self-employed applicant, you would automatically have a relatively higher interest rate than those who are employed full-time. So what's the bank's view on applicants who are employed full-time, and particularly when it comes to the rate that they would be charged?
So you said full-time, but I suppose you meant self-employed.
Yes, self-employed, correct, yes.
So for self-employed, so we obviously, and as I said to you offline, off air, we do get quite a bit of application coming in from self-employed, and again it depends on the circumstance. It depends on the applicant. So if you come in as a director of a business and you're applying in the name of the business or in the personal name as a self-employed, however you have a poor credit history. Then, so whether you're full-time employed or self-employed, the chances of success of getting a loan is very slim. So I spoke about it earlier around making sure that you pay your creditors and making sure that you obviously pay your accounts timeously, because we do look at credit bureau to check, your behavior in terms of repaying your debt. So our view is past behavior in terms of debt repayment is a good indicator, not the only indicator, is a good indicator of how you will manage your finances going forward. So it will depend on the individual and on the business. So our success rate, I think, in general, is between, I said to you, 30 and 40% in terms of approval rates, and again, that just depends on the type of customer that we're dealing with, Zama. Our flow currently is anything between 12 and 20% of our daily flow of applications coming in is coming from our self-employed individuals. And then maybe just in closing around the question around interest rates, and again, that will really be impacted or viewed in terms of, firstly, the customer's risk profile, so the business and or the directors or the trustees or the members' risk profile. So that will be a determinant in terms of the interest rate, and as well as the loan to value. So if you come in with a higher own contribution, and you have a good credit rating, then obviously you will get a better interest rate, as opposed to someone with a marginal risk profile and coming in for a higher loan to value. You will obviously be charged a higher interest rate. So again, we very much there to, and again, I want to emphasize, we're there to house the nation, making sure that we put people in homes. So again, it doesn't. So I don't want your viewers to be deterred because I'm self-employed. Now I have a view that I can't approach a bank for finance. If your financial affairs are in order, you can prove affordability, then definitely we will be more than willing to enter a relationship with you.
Julian, I want us to leave it there this evening. I know we're going to definitely be having you back on this because there's still a few issues that we'd want to explore with this one, especially as more people who are self-employed are slowly trying to access home loan facilities in different capacities. Thank you so much for joining us.
Looking forward to it, Zama. Thank you very much for having me.
And that is Julian Pick, who's the National Manager of Retail Credit Solutioning and Pricing at Absa Home Loans. Well, it does bring us to the end of this evening's Private Property Podcast with myself, Uzamandungwa Khumalo. It is a Wednesday, so you can look forward to Esty Claassen, who'll be bringing you the first time buyers show, excuse me there for that moment. I think I'm still stuck on the question that I wanted to ask Julian, but we're going to have him back on because it is one of those shows, one of those topics that is very beneficial to many people who are still self-employed. Well, that is also my cue to leave, especially because I've overstayed my welcome. I'll be back on your screens tomorrow evening at 7 p.m. Until then, hoping you're going to be staying home and staying safe.